you should have a really firm command on supply and demand before you start trading, because that's all the market is. You know, there's going to be manipulations, of course, but eventually the market's going to return to the law, right? Think of the law of like a country. Like the law in most countries is you can't kill other people. Are some people going to kill other people? Yes, that's called murder. But most of the time, people are going to follow the law. Okay? And the law in the market is supply and demand in economics. And that is why this book it was transformational for me. And it just fascinated me. Like I All right, what's going on, guys? It's your boy Jay. So I got a nice video for you today. I've been planning to do it for a while. I just had to gather all the everything I wanted to talk about so that it was concise and I'm not rambling while I'm looking for shit, right? Because you know I can do that. Uh, but this is gonna be the top trading books that have helped me throughout my journey. Um, and some of them I didn't want to like make it like a top five or a top 10. I just wanted to, go through and see books that have helped me because they've all helped me in different stages of my trading career, and it's also helped me like when I went back and read it, I understood some things later on. But they're all very good books. They're probably books that some of them are books that you've heard me mention before on the channel, and some of them I've never talked about. But in preparation for the video, I had to think about what has really helped me trading. All right, so this first one is it's a classic. You've probably already read it. But it's Reminiscence of a Stock Operator. It's by Edwin Lefebvre, maybe. Um, and it's just an awesome narrative book. Um, it's not going to teach you well. It'll there'll be some technical nuggets in there, but it's more of the lifestyle of a speculator. Because guys, if you're looking to day trade for a living, you have to have a certain mindset. You have to have a certain way that you carry yourself mentally. Okay, you have believe in your hunches. Um, you have to place your bets on yourself. I mean, first and foremost, if you're in this and you quit a job to do this, like I did, you're placing your bet on yourself that you can make more money doing this over the next X amount of years than you can at a job, right? But you have to do that every day. So when you go into the market, you're trading your psychology, your makeup, your ideas, your hunches. You're trading yourself in the market. Okay. And this book it's just so great. This is going to be a little excerpt from chapter, I think it's chapter 7. But we'll just listen to 30 seconds of it, and this is pretty good.
Chapter 7. I never hesitate to tell a man that I am bullish or bearish, but I do not tell people to buy or sell any particular stock. In a bear market, all stocks go down, and in a bull market, they go up. I don't mean, of course, that in a bear market caused by a war, ammunition shares do not go up. I speak in general sense. But the average man doesn't wish to be told. What he desires is to be told specifically which particular stock to buy or sell. He wants to get something for nothing. He does not wish to work. He doesn't even wish to have to think. It is too much bother to have to count the money that he picks up from the ground.
Okay, so that's enough. So that's just an excerpt, just a little bit, but that just said a lot right there. Most traders, when you go to sign up for a signal service, what you're saying is, I don't want to be a trader. I want to be told what to do. Okay. I don't want to form an opinion. I want an opinion formed for me. Okay. And I think mostly that happens to people. And I'm not knocking you. Okay. I'm not knocking you if you sign up for a signal service. Okay. I'm not saying that you're lazy or anything like that, but you're not a trader for sure. Um, you're someone that wants to be involved in financial markets, but you don't care to do the research. You don't care to want to engage with the market and figure it out. You don't like the problem of figuring out the market. You like the gains of someone that's already figured it out. And that's fine. I mean, that's fine. You could use a signal service to get proficient. You could say, okay, I pay for a signal service, and if his signals are good, you could go back and say, okay, why are these signals good? And you could address it that way. But most people that sign up for a signal service, they're not going to think that way, because if you're into figuring it out with your own mind, your own thinking, you don't gravitate toward a signal service anyway. I've never paid for one. I play poker a lot at the casino, and we get to talking with other players and stuff. And this one player was like, "Do you have Twitter for signals?" And I was like, "No." And he's like, "Dude, you need Twitter for signals. I make a lot of money off signals on Twitter." And I was like, "That's great. I like my own signal. I like to create my own. You know what I'm saying? I like to figure it out myself." And he was a terrible poker player too, by the way. But anyway, so nothing wrong with that. But you have to decide if you're going to be a trader or you're just going to be someone that wants to interact with the markets, but you don't want to put in the work. So you'll pay someone else to put in the work for you. It's you're outsourcing the work. But you never if someone's always handing you a fish, they're never teaching you how to fish. Okay, so you could never really make this full-time income, or really escape a job, which was always my goal, with a signal service. Because if he shuts down the signal service, or he makes it more expensive, or he dies, what are you going to do then? You know what I mean? So, not into signals, but that book is fantastic. All right, moving on to the next one. All right, so the second one that I'm going to talk about, it's called Mastering the Trade, third edition, Proven Techniques for Profitable Trading, Profitable from Intraday and Swing Trading Setups. It's by John F. Carter. Okay. Um, I read this book, well, I listened to this book maybe a year after I started trading. It really got me into the futures market, and it got me into knowing what the market internals were. There's a really good section on internals in the book. The ADD, the ad, the ticks, which I use every day. ADD I use every day. The vol speed, um, really good section on that. But it also talked about the put call ratio. I had traded options for a couple of years, had made a bunch of money, and never even knew about the put call ratio. So I'm not sure that I even still need to know about it. And like most things in trading, you don't really need to know what's happening. You just have to trade what's happening. But the put call ratio stuff was interesting. When everyone's buying calls and everyone's bullish, um, everyone's already long. So there's no one else to buy. So the price has to come down because no one wants to buy higher. Everyone's already long. And the same thing with puts, when everyone's short and super bearish, and that's when bear markets turn around, when the news is just the worst news ever, and there's a war here, and there's a shortage there, and there's an assassination, and everything's terrible. And people are like, oh, this market's getting ready to go to zero, and then it'll turn around because no one wants to sell anymore. Everyone's already short. So um, here's an excerpt from that.
Phase 2 trading. Fear-based trading, or why does everything I touch turn to crap? Many traders think that once they become more cautious, their trading will improve. They're wrong. When traders decide that they don't want to lose any more money, they unwittingly turn themselves into the late entry champions of the trading world.
It's happened to
They
me.
wait, and they make doubly sure that a trade looks good before they take it. In this scenario, the markets start to rally. But by the time these traders are absolutely convinced that this rally is for real, they've jumped in near the dead highs of the move. These traders and the rest of the traders who did this just gave the markets the fuel they needed to start moving down. Why? Because suddenly the market has a lot of stops being placed beneath it, and like wind on a forest fire, these stops will ignite a sell-off. This safe, cautious entry quickly turns into a loss.
All right, so that's an excerpt for that. Great book, great audio book. I don't know about the book, but great audio book. Comes with a accompanying PDF. Check it out. It'll just get you into a lot of the underlying things that go into the market that you might not think of. All right, so the third one I'm going to recommend for you guys. It's called Technical Analysis of Financial Markets: A Comprehensive Guide to Trading Methods and Applications. John C. Murphy. So this is it's like some call it the Bible of technical analysis. They call everything the Bible of technical analysis, but this book is highly regarded. I didn't listen to this book until I want to say I had already had a really good profitable streak, but then I had kind of fell off. I think it was when I stopped using my trend lines as much and I kind of fell off and I was like, oh, I need to know more about technical analysis so that I can get back on. That's always the thing. But if you're just starting out, it's good to listen to this book or to review this book because it'll just give you a good foundation in technicals because day traders were mostly trading technicals. And as a byproduct of that, we're trading as a byproduct of that, we're trading fundamentals. So we're indirectly trading fundamentals. But here's the thing: this is what clicked for me with this book is when you're trading technical analysis. And I have a friend who's just a fundamental analysis. He's more of an investor, so he doesn't trade, but he never really understood technical analysis. So I'd send him charts and things with trend lines, and he's like, "It doesn't make any sense." But everything to know about a stock is already in the price. That's what technical analysis presumes. So if, say for instance, if Elon Musk were to die tomorrow, every company he was a part of, Tesla, well, Twitter's not public anymore, but say Tesla, it would drop instantly. As soon as the algorithms got a hold of that news, it would bam, it would probably drop 50%, right? Because he is Tesla. Let's be real. Um, so how can you can't trade that after the fact? You know what I mean? So once the news is known, it doesn't matter what the news was. Because they're already showing you how they're reacting to it. They're showing you what they think about it. Now, it may be important to know the news to trade to have a longer term. Is it going to be something that's temporary that could probably rebound? Maybe it's at a discount right now and there's an overreaction. um, maybe it was a false headline. Maybe he's not dead. And but you wouldn't know that when as soon as you knew it was a false headline, the stock would go right back up, right? But say something temporary. I can't think of some off the top of my head, but something temporary affecting a stock, and you're like, okay, this is still a really good stock or whatever. I'm going to buy it, but once again, that's going to be more from an investment standpoint than it's going to be from a day trading standpoint. But what this book helps with is just knowing that technical analysis works. It's not pseudoscience. It's not. It's really like self-fulfilling prophecy, and you can learn so much more. You can learn so much more from um, technical analysis of a chart than you can from studying fundamentals, because by the time you study them and the time you know them, they're already priced in. You can't get any advantage from that information most of the time. So we're going to play this little excerpt from this chapter here.
Before beginning a study of the actual techniques and tools used in technical analysis, it is necessary first to define what technical analysis is, to discuss the philosophical premises on which it is based, to draw some clear distinctions between technical and fundamental analysis, and finally to address a couple of criticisms frequently raised against the technical approach. The author's strong belief is that a full appreciation of the technical approach must begin with a clear understanding of what technical analysis claims to be able to do, and maybe even more importantly, philosophy or rationale on which it bases those claims. First, let's define the subject. Technical analysis is the study of market action, primarily through the use of charts, for the purpose of forecasting future price trends. The term market action includes three principal sources of information available to the technician: price, volume, and open interest. Open interest is used only in futures and options. The term price action, which is often used, seems too narrow because most technicians include volume and open interest as an integral part of their market analysis. With this distinction made, the terms price action and market action are used interchangeably throughout the remainder of this discussion.
All right, so that's a good one. Check it out. Audiobook form is what I got it in. I listen to it all the time. I'll pick certain chapters out of it about Dow theory and things like that, but it's really comprehensive. And I think if you're just now starting out, um, you could get lost a little bit in it. But if you know a lot about the markets and you just want something to listen to that's market related to keep you thinking about them, that's usually how I listen to the books nowadays. Okay, so this next one is it's a newer one. It's called Best Loser Wins. It's by Tom Hogarth. He has a YouTube channel. I think it's Trader Tom, and he has a blog and a website, tradertom.com. Um, this book is phenomenal. Okay, just from he's a huge trader. First of all, he does it live. He makes anywhere from 300,000 to 500,000 a month. A month, guys. I can only aspire to be a Tom Hugart. On the first listen through the book, though, I kind of missed the part where he got a lot of money from mining and then came into trading. So his circumstances are a little bit different. I always think that the biggest traders, they have to have some money behind them. Like they have to either hit a big trade off the bat and then they can go on and increase their size and become big traders, or they have to have like they sold a business, or they have to have something, some financial backing to trade big like that. I'm really impressed by the people that start from nothing. They start with $5,000 and turn it into 10 million into 30. You know, market wizard type shit. And there's no market wizard books in this list because they're all the books are fantastic. And you probably know that if you're a trader. My favorite market wizard book is Unknown Market Wizards though, because it's like everyday people that like me and you that do this extraordinary stuff. But anyway, getting back to this book. So the first time I read through it, I thought, okay, or listened to it, I thought, okay, he started talking on he trades his big size, and then when I listened to it again, it turns out he sold like some type of mining drill or something like that and made a bunch of money from it, and he was able to trade. Now, just because you come into the market with a lot of money doesn't mean you're going to be a successful trader, especially not a huge trader. But there's a big delta between the person that starts here with $500 and turns it into 10, 20, 30, 40,000, and the person that starts with 3 million and is able to just continue to turn it. There's a big difference in that, I think, in the mindset. You know what I mean? So it's a little bit less impressive, but the book and his advice is just, it's freaking stellar. um the best thing I got out of the book, I'll play an excerpt because I couldn't find the one. I thought I bookmarked it, but I didn't. I couldn't find the one I wanted to find. So I'll play this little tip and then I'll talk some more.
20 trades. My friend Dr. David Paul gave me an exercise, which at its heart is designed to strengthen the process of your trading. It is as simple as it is difficult. Your job is to execute 20 trades as the signals appear. One by one, you take every trade signal as it comes. The purpose of the exercise is not actually to make money. You will probably break even, and that is fine. The purpose of the exercise is to smoke out your internal conflicts and your unresolved emotions. It has at its core the idea that if you can execute 20 trades without any kind of conflict, you are trading from a carefree and fearless frame of mind. This means you are trading from the perspective that 1. Anything can happen, and you are emotionally detached from the outcome. 2. Every moment is unique, and you are no longer drawing associations between this moment and another moment. You are pain-free. 3. There is a random distribution of wins and losses. You accept the outcome as if it were a coin flip exercise. 4. You don't have to know what will happen next to make money. So you trust the process. You focus on controlling the only variable you can control, which is how much you want to risk on this trade.
So I really like that last one there, the 20 trades thing. We talk about 20 trades when we're doing videos. Talk about 20 trades. There's actually a Mark Douglas thing. Mark Douglas trading in the zone will be on the list. Not in this one. It's going to be in the part two because I really want to go in depth in it. But the big takeaway is um, knowing that this trade is independent from the last trade and it's going to be independent from the next trade. You don't have to know what happens next to make money. You don't. You don't have to know what happens next to make money. Technical analysis will fool you into thinking you know what happens next, but you don't have to know. It's all about, is there a 51% chance of this happening over the 49% of something else happening? Yes? Okay, take the trade, right? It should really be that simple. But he also goes into detail about he never adds to a loser. He only adds to winners. And before I read this book, I really struggled, or listened to this book. I really struggled adding to winners. I really did, because he talks about why you struggle with it, why um, in everyday life you have a supermarket mentality. When you go into the store and you see something that's cheaper, like toilet paper, or anything that's normally expensive, you buy more of it, right? That's simple supply and demand. But it doesn't work that way in the stock market. When you see something cheap in the stock market, it doesn't mean it's time to buy more, because what it means there is everyone's telling you, hey, we think this is worth less than it's currently worth right now. That's why we're selling it. Because if we thought it was worth more, we would be buying it, right? So, and he has this. It's such a great book, but he has this incident in there with Paul Tudor Jones. He was like, he was with trading with someone, and they were like, um, the stocks broke 30 points in less than 5 minutes. I'm going to buy. And Paul Tudor Jones was like, what? Why would you buy? If anything, you should be selling. He's like, what do you mean? He's like, I definitely wouldn't be buying right here. And he's like, well, when would you consider to buy? And he's like, if the stock kept falling, I'd never buy it. I'd sell it to zero. And he's like, so when would you get in if it was starting to go up? He said, if it started to go up, I'd buy it to infinity. But there's a lot of great takeaways from this. I think you will appreciate it if you're in the if you're on the cusp of being an advanced trader, from intermediate to advanced. But it's mindset. It's mindset. This and trading in the zone. This is kind of like, I think of him like as like companions. But he gives it like he gives it a freshening up. Like the ideas are the same, but the way he puts it is just different. You just go, oh, aha, you know. So adding not adding to a loser ever, because you want to be the biggest size when you are right. When you are right, so you would be adding to winners, and you want to be the smallest size when you're wrong. So if you bought one contract and it went against you, you never added to it. So if you took a loss, you took a loss on your smallest position, right? I've kind of tweaked that a little bit recently in my trading. I have like a standard lot, like I want to do three contracts. That's my base position. So if I buy the first one and it moves against me a little bit, I can add the other two lower up to a certain point. Up to a certain dollar amount, I will add on until I realize, okay, the trade's not working. But it's always within a stop area for me. So listen to it. It's a great book. It's entertaining, and he's just a massive, massive trader. And I hope I could be like that one day. Okay, so this next book, it's not a trading book at all. It's a economics book. It's called Basic Economics: A Common Sense Guide to the Economy by Thomas Sowell. Um, so what I loved about this book is it just teaches you so much about markets. Like it teaches you so much about markets. Like just the price ceilings and price floors and the role of prices in a market. Price is the only thing that matters in a market. What is someone willing to pay? Like if you got something and you think it's worth something and no one's willing to pay it, guess what? It's not worth that. Whether it's a house, a shoe, an iPhone, a bag, whatever. This book is so good. It just it I'm getting excited just talking about it. It just gets you thinking about scarcity, and it gets you thinking about how there is supply and demand in everything, every single thing you can think of, in relationships, supply and demand of your time, your affection, your sexual energy, um, in everything, guys. It's listen to the whole thing, and I'm going to play this short excerpt about the role of prices, but it's a phenomenal book on economics. And I took economics in college. I aced both those classes, micro and macro, and I loved them. I absolutely loved them. But supply and demand economics, you should have a really firm grasp on that. And I have a supply and demand video on my channel. Check it out. Try to simplify it. But you should have a really firm command on supply and demand before you start trading, because that's all the market is. You know, there's going to be manipulations, of course, but eventually the market's going to return to the law, right? Think of the law of like a country. Like the law in most countries is you can't kill other people. Are some people going to kill other people? Yes, that's called murder. But most of the time, people are going to follow the law. Okay? And the law in the market is supply and demand in economics. And that is why this book is it was transformational for me. And it just fascinated me. Like I was just fascinated by it. Even after acing economics classes in high school or in college, it just gave me so much more. So I'm gonna play this. This will be the end of the video, and I've got about five more that I've written down. We know trading in the zone is one. There's about four more that you guys will probably be surprised by. So like this video, comment, and you'll get the second video.
Chapter 2. The Role of Prices. The wonder of markets is that they reconcile the choices of myriad individuals. William Easterly. Since we know that the key task facing any economy is the allocation of scarce resources which have alternative uses, the next question is, how does an economy do that? Different kinds of economies obviously do it differently. In a feudal economy, the lord of the manor simply told the people under him what to do and where he wanted resources put. Grow less barley and more wheat, put fertilizer here, more hay there, drain the swamps. It was much the same story in 20th century communist societies, such as the Soviet Union, which organized a far more complex modern economy in much the same way, with the government issuing orders for a hydroelectric dam to be built on the Volga River, for so many tons of steel to be produced in Siberia, so much wheat to be grown in the Ukraine. By contrast, in a market economy coordinated by prices, there is no one at the top to issue orders to control or coordinate activities throughout the economy. How an incredibly complex, high-tech economy can operate without any central direction is baffling to many. The last president of the Soviet Union, Mikhail Gorbachev, is said to have asked British Prime Minister Margaret Thatcher, "How do you see to it that people get food?" The answer was that she didn't. Prices did that. Moreover, the British people were better fed than people in the Soviet Union, even though the British had not produced enough food to feed themselves in more than a century.
All right. That should whet your appetite for that book. But it's a fantastic book. So where do you start? I'd start with Reminiscence of a Stock Operator. It's just easy listening, and it lets you know, like it just kind of gets you in the mood, like in the speculation mood. Like we're speculators, guys. You call us gamblers, call us whatever. But we're speculators. We use technical analysis as a tool to help us speculate. But at the end of the day, we're speculators. Okay, so we have to know um, how to speculate and how to think about it, how to get into the mindset of speculating. You can't be afraid. You can't take other people's advice, and you gotta be able to control that risk. So start with that book and then maybe work your way through the other ones. But that economics book, man, I listen to it every day. Every day, it's always a chapter where I learn something or I hear something that I didn't know. All right, I will see you guys in the next one. Check out the communities tab. There's a recording or there's a note down there about interviewing, like I mentioned earlier. And I've gotten about 20 emails so far. I'm going to go through them and reply, let you know that I received them. And we're going to start lining up some guests. All right. All right, guys. I will see you in the next one. Thanks for watching. Peace.